Happy end of January, everybody. It's kind of hard to believe that we're already in the final week of January 2026. The Fed will be meeting today and likely leaving the federal funds rate right where it is. The 10-year Treasury was down, now it's up. And mortgage interest rates were trending down, now they're trending back up again. And before you know it, we'll be talking about what has become amalgamized as one holiday: Halloween, Thanksgiving, and Christmas. It's like they're just one big holiday. Has anybody noticed that? It's crazy. So the topic of this month's video is, so you want to wait. Since April of 2022, the housing market, at least in Florida and Tampa Bay, Gulf Coast area, has been correcting quite dramatically in some demographics or areas. I should say. Can't believe April of 2022 was almost 4 years ago now. That's how long our housing market has been correcting. And we're not done yet. It always changes. It's just a question of which direction it's going. But since April of 2022, the commonality between buyers, sellers, investors, etc., is we're going to wait. It seems like everybody's waiting for something. Buyers are waiting for interest rates to go down. Sellers are waiting for interest rates to go down. Investors are waiting for interest rates to go down. But it's interesting because interest rates going down really only benefit one person. And that's what we're going to talk about in this month's video. So, welcome back to another edition of Matthew's Monthly Housing Market Minutes. I'm Matthew Sharp. Look forward to diving into this with you today. So, conversations that we've been having with clients over the past 4 years have been, we're going to wait. Let's talk about what waiting looks like. There's only one person that, there are always exceptions to the rule. However, predominantly in the real estate space, there's only one person that benefits from waiting for market changes. That one person is a seller who is not re-entering the market. Meaning you're going to sell a property that you own, you're not going to buy back in. The reason why that's the only person that benefits, we'll talk about buyers and sellers in this video briefly. The reason why they're the only person that benefits is because when they exit, they don't intend to re-enter and buy back in to the same market that they're already in. So if there's ever such thing as timing a market, it's from a seller's perspective when values get to an acceptable range and then they exit. But there's really no such thing as timing the market because we never know the peak, we never know the bottom. However, at some point, let's just say I would sell my home for $1 million and the threshold gets to $1 million. Great, I exit. That's the only person who benefits from waiting. Because otherwise, we're speaking from a seller's perspective. If you tell me that you're going to sell your home and you're going to buy back into the exact same market you're in essence, by you waiting, if you're waiting for values to go up or you're waiting for values to go down, we won't mince the semantics. You're just the distance between what you want, meaning the home you want to buy, the home you want to sell, and what you have is always the same. So if interest rates go down and you're going to sell and buy back in, the value of your home, the differential's the exact same as it was. You can set the interest rate every day of the week. I mean, within reason, right? You could refinance your home every day of the week as long as the bank will allow you to do it. But you only set the purchase price once. So if a seller's waiting for their value to go up and they're buying back in, they're just saying, I can't wait to sell my home for more money and spend more money on what I'm going to buy. And the buyer that says that they're going to wait until interest rates go down, well, what happens when interest rates go down? Any noticeable, tangible amount, values tend to go up. It takes time for them to go up. However, when interest rates go down, I see it every single month. Mortgage applications go up, contracts pending go up, sales go up. So in essence, you have more competition. There are more buyers flocking into the marketplace the second interest rates go down, and they gobble up all of the very best deals. The very best deals sell quickly. So can you see how even then a buyer is at a disadvantage when they wait for rates to go down? That's why I say the only person that ever benefits from waiting is the seller that is selling an asset they no longer want to own, whether it's a rental, their second home, third home, a family's home that they inherited, and they're not going to re-enter to the same market, meaning they're not buying back in. That's the only person that benefits from waiting. Because if you're waiting for values to go up as a seller and you're going to buy back in, you're just going to spend that much more money for what you're going to buy. Also, we know the market we're in today. We don't know the macro and micro factors of the market of the future. So if you wait and values do go up and inventory drops off considerably, like it did during COVID, which that was an anomaly, a once in a lifetime situation. We had 15 days of inventory on the market though. So there were sellers who were selling for astronomical amounts of money, but then they couldn't secure another home. Meaning buyers were beating them to other properties because there were 38 offers on properties. So if it shifts to a market like that, the seller selling at the peak of the market, or timing the market, or waiting, whatever you want to call it, is actually at a much more dramatic disadvantage than they would be if they sold in a market like today, where we're still selling homes for about 70% more than we were in 2019. Put that into perspective. There are people that are waiting for the market to get better, meaning values to go up, and your home's worth 70% more on average than it was 7 years ago. As somebody who owns a lot of real estate, I like that number. Now, if you bought within the past 2 to 3 years, yeah, you have a problem. You bought at the peak of a market, and your home is worth less than what you bought it for. Anybody, ubiquitously, by and large, if you bought within the past 2 to 3 years, even if you put down 20%, I have clients that are writing checks to sell homes. And for them, they may need to wait. They may need to wait because right now them selling looks like them writing a check. And for some people, that's financially impossible. So you may need to wait until a time when you can cash out. You're in a positive equity position. But even then, if you're re-entering the market, you're still not at an advantage. It's going to be a net equal. You pay now, you pay later. So to kind of wrap this up, talking about buyers in summary of sellers, if you're waiting for the market to get better, great. As long as it's a rental property and you're not going to buy back in, I encourage you, wait. Wait until the cows come home, because eventually you'll get whatever you want for a property. It's just a question of how long you have to keep it to get there. Could be many, many years. As a seller that's going to buy back in, it's irrelevant whether you do it today or 10 years from now, because if your home value goes up, what you're going to buy is going to go up. And you can set the rate every day of the week. So you're better off with the devil that you know. You sell now, you move into what you're going to buy, and eventually, because everybody's waiting for rates to go down, right? Well, if you're so confident they're going to go down, eventually when they go down, not only will you have bought in and your home is less expensive, so you're leveraging less money, well, you get a better rate down the road. It's a win-win. Now, from a buyer's perspective, if you're waiting for rates to go down or values to go down, keep in mind, you only make money on the buy, and right now values are down in some demographics or some asset classes, whether it's a single-family home or a condo. Some condos are down by over 50%. Some single-family homes are down by 40%. Well, when groceries go on sale at Publix, when they go buy one, get one free, we don't say, we'll wait for a better sale next week. You tend to go buy what's on sale. Well, right now, it's on sale. So get out your checkbook. Real estate's on sale. Now, if you're waiting for rates to go down, rewind this video like a minute or two. I don't have timestamps. But rewind it a minute or two. You can only set the purchase price once. And if you're so confident, because you're waiting right now for rates to go down, right? Everybody's so confident they're going to go down. Well, if you're so confident they're going to go down, why not buy in when values are lower and then refinance it down the road? Otherwise, you'll just keep waiting forever. And then if rates do go down, just like we talked about before, every other buyer is going to flood into the marketplace, buy up all the very good deals, and you're going to end up with the leftovers, or you're going to end up paying more for the exact same home you could buy now for 30, 40, 50% less. Hopefully this makes sense. Hopefully it helps. So in summary, the only person that wins is the person that is not buying back in, or they're selling an investment property. And in that case, wait until the cows come home. Otherwise, it may not benefit you to wait for greener pastures, because we don't know when those greener pastures will come. It could be 3 to 7 years, because market transitions tend to take 3 to 7 years. The last one took 16 years. Keep that in the back of your mind. 16 years from start to finish. So from the peak to the bottom, and then it had to come back up. 16 years. And we're going on year 4 of this housing market correction, and it hasn't bottomed out yet. So we still have to hit bottom, and then it's going to have to take several more years to climb back up the mountain. Can you wait that long? If you can, great. But keep in mind, it might not be in your best interest. Please call us with your questions. Email us with your questions. We want to be your real estate resource of choice. We'll keep pumping out the videos monthly. And when we can do anything to add value to you, your family, your situation, let us know. Phone's always on. Door's always open. For this January edition of Matthew's Monthly Housing Market Minutes, I'm Matthew Sharp, Sharp Home Solutions, Keller Williams Realty. You be good.